So for this next segment, we're going to talk about the different entitlement programs. And those entitlement programs include Social Security disability insurance and a program that's pretty important to this kind of planning called childhood disability benefits. And also, to a degree, it does include retirement benefits, since for persons who are on Social Security disability insurance, when they get to the retirement age, they eventually move on to a regular old Social Security retirement. It also includes Medicare, which we're going to learn is tied to these different programs. So, for the basic program, Social Security Disability Insurance is a national program for injured workers that contribute the requisite number of work credits into the Social Security system. Social Security Disability Insurance has no income or resource limits, hence it's an entitlement, and an SSDI recipient could win the lottery and remains eligible so long as they haven't earned more than the substantial gainful activity amount, which determines whether or not they're eligible at all. As far as childhood disability benefits are concerned, it's actually good to review this publication, which is the Social Security Benefits for Children publication 50-10085. And the version we're looking at was issued January 2025. So here's what it says. It says that Social Security pays benefits to children, and at this point we're talking about all children, whose parents, one or both of them, are retired, deceased, or have a disability themselves. And to get benefits, a child must either have a parent who is retired or has a disability and is entitled to Social Security benefits, and that does not include SSI, or a parent who died after having worked long enough in a job where they paid Social Security taxes. In this case, a child needs to be unmarried in most cases. And if they are married, there's a concept called marital deeming you have to look at, which is basically attributing the assets and income of the spouse to the disabled individual. They must be also younger than 18 or between 18 and 19 and a full-time student in up to the 12th grade. And then the exception that involves us is that they can be over the age of 18 or older with a disability that began before the age of 22. Under this program, a child may be eligible for a Social Security under the Childhood Disability Benefits Program if the disability onset was after age 18 but before the age of 22. Now, sometimes it's difficult to prove this. An example would be if a child is getting SSI when they turn 18, already been adjudicated disabled. But what, for instance, happens when you have maybe somebody with a mental illness where it definitely began before the age of 22, but they didn't get their benefits until maybe, let's say, 25. And in a case like that, you can still get the childhood disability benefits, which are very desirable. But the job is going to be to prove that the disability began before the age of 22. You know, for some of the clients I have that have children that are somewhat in the marginal area, I usually suggest to try to get them qualified for benefits before the age of 22 so we can get this adjudicated because this program is so valuable. So, under the Childhood Disability Benefits Program, benefits are payable upon the parent's death, retirement, or receiving some sort of disability under the childhood disability benefits. And the other limitation is they cannot have performed substantial gainful activity since the age of 18. Social Security is not affected by the child's assets, but the child's income could result in an eligibility determination because, once again, the definition of disability is the inability to earn SGA based on the disability that's likely to last a year or longer or end in death. So let's go through a couple of examples about how this program works. Upon the death or retirement of the parent, an eligible disabled child will receive an amount equal to 1/2 of the parent's benefit. Upon the death of the parent, an eligible disabled child will receive an amount equal to 3/4 of the parent's Social Security benefit. So, let's take an example. In this example, let's say that Helen has been disabled from birth and is receiving $1,206.94 a month in SSI. Helen's father, Earl, retires and receives $1,600 a month. Helen begins to receive $800 a month, 1/2 of what he's receiving. Now, the receipt of the childhood disability benefits is unearned income, which reduces Helen's SSI dollar for dollar after the first the $20 disregard. So Helen is now receiving $402.94 in SSI and $800 a month in childhood disability benefits. So far, she's only $20 ahead. So let's say that Earl passes away and Helen begins to receive $1,200 a month. In that case, the SSI is completely eliminated and the Medi-Cal is maintained as long as she remains otherwise eligible. Remember that for Medi-Cal, the resource limit of $2,000 was eliminated for Medi-Cal. So there are different ways to maintain that Medi-Cal eligibility, but it's something that's going to have to be paid attention to. The last program is Medicare. Medicare is a federal insurance program for persons over the age of 65, and also for folks that are 65 or older who've been getting Social Security based on disability 2 or more years. Persons can be eligible for both Medicare and Medi-Cal, and Medi-Cal becomes the payer of last result. But it covers all sorts of things that Medicare doesn't, including long-term care costs and attendant care.